Another red day in the books for the stock market today, guys, and guess what? We're going to be breaking it down in this video, and of course, we're going to talk about Tesla stock. We're going to also go over some other stocks that I'm looking at, charts I'm liking, so sit back, relax, hit that like button, and make sure to subscribe, and let's just dive into the video. And by the way, I can't forget this. If you want some free money from Moomoo, get up to 20 stocks, each up to $2,000. Just use that link down below, deposit at least $100, and boom, you get some free stocks. It also helps out the channel, and now let's dive into the video. So like I said, it was a red day all across the board today in the stock market. The metals were down. We had the VIX down as well. The Russell, the NASDAQ each went down 1.4%. S&P down 0.9% as the Dow went down 0.5%. And again, VIX went down, metals went down, and if we're looking here at SPY, which tracks the S&P 500, you guys know that at this point, this ended up falling under not only 390, well, that's old news. I mean, that happened, last week. We fell under 390. We tried holding 382, 383 today. We failed doing that, and we ended up dumping now, and we pretty much are holding on above 380 by a thread. But the fact that, and I'll zoom in here and show you guys this, the fact that we ended up taking out the lows from Friday today, which those lows were at about 381. The fact that we took those lows out, we hit 378, and you'll see this here on the intraday. I mean, it was just a day dominated by the bears today. The fact that we hit 378, took the Friday low out, that is not good at all for the bulls whatsoever. So going back to that 4-hour chart here on SPY, guys, to me, it looks like we're on a one-stop, bus right now, all the way to 374, 373, which is the low here from the beginning of November. Now, if that were to break, we're probably going to go down 368, 370, and if that were to break, I mean, things are going to start slipping even, more aggressively at that point. So it's clear to me now that, clearing the drawing set, getting all these lines aside, it's clear to me that we're falling pretty aggressively. We're back under the moving averages now. Bears are gaining the edge 100%, and we have a golden cross, right? It's clear to me that the tides are turning at this point, right? And, we just keep on knocking support after support after support out. The bulls are not looking too great. And Triple Q, if I pull it up, I mean, pretty much the same thing, right? We failed last week at about 278. We broke right through it. We ended up, trying to hold 273. We were fighting at that point today, and we ended up falling, pretty aggressively under that point. We fell under 273. We fell under 270 as well, and we closed at 269.75. And if I pull up the intraday chart, you guys are going to see we got all the way down to 268.50 at the worst, at the lowest point of the day, which was right around, when was this? 340, about 20 minutes before the markets closed. So yeah, Triple Q, like SPY, as expected, is running through support levels, and it's just not looking good. So by the looks of it, this is going to go, in my opinion, well, I don't know for sure where it's going to go. Nobody knows exactly what's going to happen in the future, guys. Nobody knows. Don't let anybody tell you otherwise, right? But by the looks of it, guys, the next main level that we're going to test, that's coming up, I mean, that's why I'm saying we're probably going to test it, is right around here, 263, 265, right? That's where we held back in the beginning of October, right? You guys see it right here, right above my head. October, middle of October, into November, mid-November. So that's the next main level, 260, 263, right? 262, that general range. And then if that were to break, we're probably going to go down to 255, which is the low from the middle of October. And if that were to break, hey, we're going to be at fresh lows. Bears are going to be dominating even further at that point. And who knows where the markets are going to go from there. But the tides are turning. We have a death cross. We're under the moving averages. No reversal in sight. Bears are, looks like they're jumping ship, guys. This is headed lower by the looks of it. So what do you guys think? Let me know your thoughts in the comments as always. And we haven't done a like challenge in a long time. Let's try and get at least 100 likes. I've been seeing we've been slacking a little bit on the likes recently. So if you haven't hit that like button, make sure to do that. Let's try and get at least 100 likes. This video cannot go on. Well, I guess it'll still go on whether we get 100 likes or not. But let's see if we can get 100 likes anyway. Hit that like button. And now let's talk about some stocks. Like you all saw in the title, Tesla did not do well today at all. It ended up falling under $150 a share, and it did that pretty aggressively. We got all the way down to $145 a share on the day. That's the intraday low. We can see that right here, 145.82. And talk about volatility, guys. Holy crap. I mean, earlier in the day in the pre-market, we talked about this in my previous video, but I'll recap for you guys that missed that. Tesla was at 149 bucks. It ran all the way to about 158. Then it dropped all the way back down. Like I said, intraday low was 145. So that was a drop from pre-market high to intraday low of 8%. Then it saw a monstrous rally. I mean, this is insane. It went from 145 to 153.4 roughly. That's a 5% move. Monstrous rally. Then it ended up fizzling out heading into the close, as you guys can see. But, this is, again, talk about volatility, massive volatility here. And I would argue today was a win for the Bears, no doubt about it. Because, let me explain why. If I pull the 5-day up, notice how when we saw that huge drop midday where we hit 145, we took the lows out from Friday. Friday's lows, if I zoom in on this chart, we're right around 150, a little bit under that. If we're looking at the aftermarket Friday, Tesla got down to about 149. So we clearly took that low out. Again, we hit 145 bucks. So Bears are in charge. I would consider today 100% a win for the Bears. And Tesla, I mean, if we're looking at the closing price, didn't do that bad today. 0.25% red day. I mean, that's not bad at all considering how it's been moving down. But still, again, the fact that we took those lows out, not good at all for the Bulls. It is a win in the books today in my eyes for the Bears when I'm looking at Tesla stocks. So, yeah, that's a little rundown, a quick update on what's going on with Tesla. Now, let's take a look at some other stocks here. Wells Fargo's looking pretty interesting. Let me pull it up. Ticker symbol WFC. You guys can see Wells Fargo had a 1.5% green day today. Not too bad. And if I pull up the 4-hour chart, this is where it looks pretty interesting in my eyes. You guys see this. You guys see the uptrend, right? We can see clearly it's been making higher highs, higher lows for a couple of months here. Well, it's been more than just a couple of months. It's been since April, May. I mean, we're talking over half a year at this point. It's been in this channel, and at this point, it is pretty dang oversold. It has gone from $48 to where it is now at about $40, $41. And mind you, buyers are coming in here at the bottom of this channel. It has gone down that 13% in the span of a couple of weeks. So I'm not seeing 100%. Full-on breakout quite yet, but that is what I'm going to be watching out for. Right around here, I'd say, right around 42.50, 42.75. That's where I'm going to put my alert now, right around this 50 SMA on the 4-hour chart. So Wells Fargo does not look that bad. Looks like the uptrend's holding, but now we got to see some bulls coming in. We have to get that pop over 42, 43 to get that confirmation of a breakout. Another one that I'm looking at right now that I'm liking is MPC, which is Marathon Petroleum, which essentially is very similar to what we just saw with Wells Fargo. But this, I'd argue this chart looks even better. If I extend this to the right, we can see, yes, we're slightly under the moving averages, and yes, we have a death cross, which is not the best sign. But if we end up getting a break out of, let's say, 115, 116, I'll set my alert now at 116 bucks. We get out of there, guys. We have a wide open gap here on MPC. It could easily go back to the 120s plus. And now, granted, we don't know for sure what's going to happen. Of course, make sure you guys do your own research. I have no idea what's going to happen in the future. I'm not a fortune teller, but the chart looks good. My alert is set. If we start getting that, buying pressure, we start taking the highs out from last week, earlier this month of December as well, above 116, there's going to be a lot more upside, in my opinion. I could be wrong, but that is personally my opinion, right? So that is MPC. The next one that I'm looking at here, let me pull it up, is Cigna, ticker symbol CI. This is one that's just been on a tear, and I'm not going to lie, I forgot about this company and forgot about the stock, but it popped up on my radar today as I was, looking up stocks, how the markets did today and so forth. This one did well. It went up 1%, $3.50 on the day, and talk about a stealth bull market. This was at not 140. That'd be insane. It was at 240 bucks back in June, and now it's at 330. It pushed 340 just a couple of trading days ago. So it's up 40% in the past couple of months. And the bulls are still in charge. I mean, there's no sign, literally. I guess in the past couple of days, we've pulled back about 10 bucks, just a little bit. But there's no sign of a massive correction on the stock quite yet. I mean, sure, if it fails at the 50 SMA at 330, it might come down towards 310. But even then, if it comes down to 310, right around the 180 SMA, that would still be, it would still be in an uptrend, and maybe buyers would come in there. So overall, Cigna is one that I'm watching, whether it's at, bounces here at 330, goes to 345, maybe even higher, or it fails at 330, comes down to 310, tests at that point, 310, where we could end up, rallying off that point as well. So either scenario that happens, I'm going to be watching Cigna. And honestly, I'd prefer it to come down to 305, 310, shake out some more weekends. It's still a little bit, stretched right here. It's in a vulnerable spot. So I'd prefer it to come down a bit, and I'm going to be patient. We'll see. That's ticker symbol Cigna. Now, another one that I'm looking at is MGM. Let me pull this up, guys. This one looks pretty interesting. Let's take a look here. MGM's also one that's been uptrending for a good couple of months now, but it's been selling off the past couple of days. It's slowly been, we've been seeing some weekends getting shaken out, profit taking. Just in general, the markets have been selling off. I mean, you guys have obviously seen that, right? So MGM's been coming down. It's down 12%. Now it's under both moving averages, which isn't the best sign. And today it had a 4% red day, but it looks like we're pretty oversold on the R side. Looks like we're starting to head down to the bottom of this channel. Let's see where buyers come in, whether it's here at $34. Probably not. I think it's going to come down a little bit lower, whether it's $30, $32. I'm watching MGM because at some point we are going to get, in my opinion, a sharp bounce back. That's the way I'm thinking right here. We'll see how it ends up playing out. But MGM is one that, whether it's at 30, 32, 33, I'm looking for a bounce back. So that's on the radar 100% right now. Also, CZR. Let me pull this up. Caesars Entertainment is another one that went down 5% on the day today, and this is actually looking pretty similar to MGM. It's at the bottom of this channel. This one's actually slightly above the 180 SMA, whereas MGM's under both moving averages. So CZR maybe looks a little bit better, and we'll see, whether it's here at $45, whether it comes down to $40, $42. Let's see where CZR ends up bouncing. Let's see where buyers come in. Now, granted, it's not a guarantee that buyers are going to come in. Who knows? If CZR breaks under 40, that's not going to be a good look for the bulls. That'd be a break of trend. If MGM, going back to that one, if that ends up breaking under, let's say, MGM starts falling under 30, 32, that's going to be a break of trend, which neither of these stocks are breaking trend yet. But to play devil's advocate, you got to keep that in mind. So MGM's not looking too bad. Caesar, not looking too bad. Caesars, whatever. Caesars Entertainment, not looking too bad either. And another one that I'm looking at, which is probably one of the better looking charts in today's video, it's Enphase, ticker symbol ENPH. Enphase went up 0.5% on the day today. And if you all remember, we've been calling this stock out for months, and we've been nailing the call outs on this one. It went from $340 here just a couple of weeks ago. Now it's at, again, $305. It is down about 10-11%. And that might be all it pulls back for all we know, right? As of now, it had a green day today in the midst of a red day overall. That shows strength. We're holding above the 180 SMA where we've held the past couple of months. So let's see if Enphase, I'm going to set my alert at 310. Let's see if we get a confirmation of some sort of bounce, right? Are buyers going to come in on this bad boy? Are we going to get a move back over 310, 15, maybe to start pushing mid 300s? And mind you, this is already at all-time highs. It's been hot. Let's see if this performance could continue. But one thing worth mentioning, and I might make a video on this separately. This is actually a good topic. Let me actually write this down because I might forget about it. Actually, I won't forget about it. But this is smart. One thing worth mentioning here is these stocks that have outperformed as we're now heading into the end of the year. I touched upon this in a recent little video. I talked about it for 30 seconds, right? These stocks that have outperformed heading into the new year here, we might see some selling in these. That's something worth mentioning. As a lot of these big hedge funds, institutions are rebalancing their portfolios, moving money around at the end of the year, early next year even, there could be some gains taken on Enphase for all we know, because it's ran up so much. So that's one thing worth mentioning, right? It's up a ton in the past couple of months. And this goes for stocks in general that have been in these stealth bull markets, that have just been killing it in the midst of the overall bear market. people are going to be selling some of these stocks, rebalancing. So that's one thing worth mentioning. I'll probably make another video on this, going over a bunch of other just in general stocks that have ran up a lot that could be at risk of this potentially happening. I mean, this is kind of speculation, but it's something worth keeping in the back of your mind. So Enphase looks pretty good, guys. I'm watching it at about 305, 10, 15 bucks. Let's see what it ends up doing. And I guess that's it. With that being said, you know, we broke down Tesla, the market, stocks I'm looking at, charts I'm liking. So yeah, with that being said, let's wrap up the video. If you enjoyed it, you know what to do. Hit that like button. Again, I challenge you all. Let's try and get at least 100 likes on this video. Make sure to subscribe as well. And if you want to check out my Patreon, I'm posting daily charts every single day on Patreon. You get more access to me throughout the day, exclusive content, call outs, all that good stuff. Check the Patreon out, link down below. And don't forget to also get up to 20 stocks from Moomoo with at least a $100 deposit and 12 stocks from Webull with any amount deposited. All of those are linked down below. And full disclosure, guys, all those links help out the channel. And with that being said, I'll see you in the next video. Peace out.